So let's get straight into it. I had just came back from kickbox training. I'm absolutely exhausted, but we're not lacking recapping every single day, post training analysis. So um I made a video earlier today about some live price action where I took a loss. Yes, I also take losses sometimes. So I was telling about, this is our main height to break, and if we just can't break this point, there's nothing that bullish yet on the chart, and we can expect a rotation maybe towards the range low to take it one more time, create that model one that I was looking for, which can still happen for sure. But yeah, I was kind of more aiming towards this range to break down than to break up, especially the way it broke up. It's kind of weird. So we had the range supply right here. Let's make that purple. Had the range, of course, had a very easy short top of this range, which was at 5 a.m. for me. How I would have entered this is plus managed, since that's also very important. We had our range deviation right here. Here. Had our range deviation hit a notable supply zone, our make or break it supply zone. In it, kind of creating a model one the way we came into that supply zone, which is um, here coming up, down, up, actually breaking structure, trapping a lot of people, and wicking the high again one more time. And when you have model ones like these with that break underneath, actually that happens on a low time frame. It actually happens quite often. It's be very effective. That's like a golden tip. You can look into that yourself. But we broke that structure right here. That structure where this, if you go on the 2 minute, is actually a demand zone that turned into a flip zone because it turned into supply right here. That broke structure. And then you have your short right on this box and keep your stop above that high. And in this situation, I always like to see how price goes towards my zone. So if I was awake for this, and I see this one massive pump candle, there's no way I would mark it in right here, right? I would have to see a rejection. So I'm expecting it to reject from this POI, but I am not entering when price pumps like this towards the retest zone. So once I see price pull down, let's say we're talking about this candle right here. Now I'm clearly seeing it reject down. That's where I will enter right here, and that's when I'll put my stop right there. Okay. And what happened is this is when you broke structure, and now you were trying to get back into the volume area as well. Let me put out a volume area. I like to incorporate that to really see the acceptance back inside. So this is where we actually broke back inside the market or the volume area. My bad, and we got a bounce from the POC right here. And what's so nice is that now your trade is backed by newly created supply, which is where you entered. So this is your new supply zone. This is clearly this move up. This is where seller stepped in and broke or pushed price down. You can expect a rejection from it when you get back into it. So my stop would still be at this high. Also, when we break market structure. But once we get that retest and we have that second market structure pull, so we have up, down, or down, up, down. Okay, this is your market structure high. But when you have this retest and you have that dumb candle, this is your new market structure high. So at this point in time, I would move my stop loss towards this high and then write it down. Take some profit at the volume area low. Take some profit below these lows, and then have some profits remaining for these lows that would just never those would never been hit. When you see it accumulating right here, you can take some more profits and just put your stop, throw your stop loss, but that final TP wouldn't have been hit because that would be aimed towards the low. what actually happened, as I said in this stream of this morning, and the stream of this morning is on the longer side, but that's just because I was managing a trade live. But the updates were fairly quickly. But price was accumulating here, and I was this looked like easy to sweep liquidity down here, but it just swept the one third of it only this low compared to the three lows that we have here, and then it accumulated. So it's not that common to see liquidity below and then a nice deviation at the top to not just have the full rotation down to create an accumulation here, like an actual range accumulation and not just an internal one. But hey, that is what happened. So because we did not hit that target, I was still looking for the short. If we go over it real quick, I have my rejection zone right here. That supply zone bounced from the POC and then rejected from this zone. So we kind of had a little supply chain going on where this supply created this supply created this supply. And we were also at the volume area high of the range. And I was still in the back of my mind, I was like, we have not taken these lows, so that could be an easy target. And we came up fairly aggressively, so I was expecting a faster move down. The mistake that I made was that I didn't use valid structure. So for my structure, I want to have at least two consecutive up candles or down candles and then up candles again. Especially those down and up candles are important. Then I have a valid market structure pool. These were candles down, but there was only one bullish candle up. So that's not valid market structure. On the 1 minute, which is kind of weird, you have the candles up, but you don't have the candles down because you want consecutive bearish closing candles, and we have candle bearish, bullish, bearish, bullish, bearish, right? So that's not in my rules. That's not valid to use. I realized it actually later on because I thought the 2 minute was indeed good enough, but I didn't realize that the up candles were not intact. I ended on the short here, potentially thinking that this could also be a local PO3, where this was your range and this was just your manipulation above, and you could get acceptance back inside. Did not end up working. I got stopped out. I was aware that we had more supply here, so I saw this wick, and that's when I put my stop above that high, and then I got stopped out on this second push up. So yeah, that was a 1% loss. It was actually 1.1 because we had that wick. But yeah, shit happens. And then we took the high one more time, actually hitting this supply, but the most defined one. So right now, once price hits this, you're like, okay, if we take the high one more time, if we surpass this high, then we're just gonna have a full on rotation back towards the range high because it was the last supply remaining from protecting this range high, right? So as you can see, once we broke that, we just had that squeeze up because there was nothing here. And I was actually looking for another short in here. The bias was not on the bullish side, even though we broke up. But we had I was potentially thinking we could have a distribution in the making, a local one, right here, where we have our tab one, we have our tab two, and then this was the tab three, or no, this was the tab three. Here, let me clean this up. We had this 1 minute supply zone that wasn't mitigated right here. And I was thinking, yo, this can be our tab three, and this is where we broke structure. Literally, literally, if you shorted this one, I would not I would not feel bad about losing on this trade. Like this is a valid setup for me. This works more often than it doesn't, especially if you're thinking that this could potentially be a bigger Model 2 in the making. So you have a bigger Model 2 where the third tab has its own Model 2. We get that IBOS confirmation. Yes, it's 1 minute market structure. Yes, that's riskier, but we're also at the volume area high, and there's not much support below. Within the range, we actually have some liquidity. If you took this is 100% valid for me. If I would have lost money on this trade, I would not be mad at all. But what happened is I didn't enter on this break because I realized it a bit too late, and then we were also coming up, so I was just waiting for price to come more down. But we went higher before we took the low. And we took the low, we wicked, right? That's your sign to get out. Like here, I should have broken that low, a smooth move down towards the range low, but we just didn't have that. So, but if you took the trade and you're wondering, why did I lose? Well, it is 1 minute structure, but I wouldn't be too worried about this. Price just wanted to go higher eventually, even though this wasn't a clear accumulation from an extreme point perspective. So don't beat yourself. So I'm sorry, guys. Don't beat yourself up over this trade. It works more often than not. Just note down that it was a 1 minute confirmation, and it wasn't just 1 minute. It was literally only 1 minute because it wasn't good on the 2 minute at all. So just note that down that maybe it's the 1 minute that's kind of messing you up there, but I wouldn't be too bothered about it. It just went higher. I was like, yo, this is a very important high to break. We want to see a rotation back towards maybe this local range high, right? Um, so we wicked it, came back tested this range that we were in, hitting this order block with imbalance and sweeping some extra liquidity. But there was no confirmation for me to take a long. Like if I want to take a long, I want to see structure break, and we didn't have a clear structure break until here, and then I didn't get an entry here. So price kind of fired around. We broke this high, and immediately we swept all this liquidity because that was just too easy to sweep. Um, why didn't really work. Probably the market maker that's shorted in here did its thing already by pushing price all the way towards the range low. And then yeah, we're coming down and up, just leaving liquidity. Like the way you come down here, it's very V-shapery. We come down and we squeeze up, and then we come down, and now it could be a squeeze up, but we're curling over, right? And we're leaving a little liquidity here. And when price looks like this, I just stay away. That's so many fake breaks probably in here that you really have to just let go until that market structure isn't so tight anymore. Way more clear to draw. Okay? Oh, what? Know when you should not just touch a trade. So that was recapping Bitcoin real quick. But then the other trade that I took, which is the one that made back all the money I lost on the first one and more, which really shows um, the mind of a trader. Like really that loss, it was my mistake. It didn't bother me. It didn't make me feel bad or anything. No, no, we just move on, right? So regarding Matic, we actually hit the only. I'm looking what this demand was real quick. Um, yeah, so it was the only range demand remaining before actually taking the range low, right? And what's actually funny is that the alts were looking bullish while Bitcoin wasn't at that moment in time. But I was also looking at the Ethereum versus Bitcoin chart, and I could go over that real quick after this setup. Because I saw the ETH Bitcoin chart, I actually posted about it on my Twitter. That the Ethereum Bitcoin is looking pretty good here. So it's like maybe alts are gonna outperform Bitcoin better, and we would see more bullish price action or less bearish price action on alts and on Bitcoin. So I was like, hey, Matic is in range discount section, and we hit the only clean looking range demand before taking the range low. We have to look for longs. And the way we just absolutely come in here is clearly a Model 1 Wyckoff accumulation. Like this looks very clean. And between or to find an entry, I want that structure to break towards that third tap. And it was a clear entry model. You did not have to hesitate once on this trade. I like to see my breaks. I like to see my acceptance back inside the volume area. I checked the break, and the break was back inside. So what did I say here exactly? Yeah, here. So right here, you had your first break, and it was 1036, and I was still paying close attention on 1036 towards Bitcoin here. 1036. Look at this. 1036. We were discussing Bitcoin. Okay. And I was looking for a Bitcoin short. So if I'm looking for a Bitcoin short, I wasn't really paying attention to Matic, and I wasn't looking for a long on Matic at all, right? However, the moment we took that high again at 11:10, and then at 11:38, I was realizing that the short wasn't going to work, and we're probably going to hit higher if we take out that high. If you look at the timing, well, this is around that Bitcoin short idea. So maybe we could actually say that Matic is leading the way a bit, showing very bullish and showing a lot of strength. So maybe I should not have looked at the Bitcoin short then, but normally it's the other way around. However, when once I saw Bitcoin broke its bearish pattern, failing that distribution around 11:36, as I just discussed, I switched to altcoins, seeing if maybe I could catch a pump on one of those, right? So here I saw, yo, we have a model one, we have a break, and we have a break back inside the volume area. That's a trade. And I just followed this structure up. Um, so once this high broke, that's why I entered. My stop went below this low, and then I rode it up all the way towards the range high, right here. Entry was right here. Stop goes below the low. You target the range high, where I took profit. Um, I took profit at this. It was like a 75% TP because it was just so obvious. We had the liquidity right here, and it was a clear looking range supply. But as I say, the technical target is indeed always the range high. But I'm glad I did because it would have been harder on the brain if you did not hit profit. It took 75% out on the high. I moved my stop towards this low, which is the valid way to do because you're in this uptrend. And my entry was here. So I already took a 75% TP here. So if I got stopped out, I got stopped out for fucking $10. That's nothing. Like that, it's pretty even. And then hold the trade and it hits the target here. Or maybe you could have looked for a short since we swept the range high and then we broke back here. Yeah, you would have made some money, but I wouldn't call it a high probability setup per se. But those were the two main trades, for sure. Only trades, and then I didn't really pay attention to gold today or to euro. I was watching a long on gold, trying to find somewhat of a long because we had that model one going on, but it just grinded up, leaving a lot of liquidity below, and we swept it, and then we went higher, and now we're just farting around. So that Bitcoin trade and the Matic trade, how I exactly managed it, I'm kind of forgetting. Um, but yeah, I entered here following this local structure pull up like this. I saw the internal break, knew we were going to come to this high, entered there, stop went below the low, did not move my stop loss until we were around, yeah, until we were pumping here. I was like, you know what, I'm putting below this low, which is also the market structure, higher low, higher high. And took profit at the extreme range supply because it always gives a reaction, and then left some run before the range high. And just because it's so close to each other, I took 75% already here. And then yeah, you just don't touch the damn trade after that, right? So I manage it very easy on the brain. It's an entry model, and they work. Wyckoff work. I don't see anyone using Wyckoff the way we do it here, creating entry models behind it. But that's kind of it. We can go over Ethereum versus Bitcoin really quickly because I would like. Then we can keep this stream shorter. So I was waiting. I have been waiting for 2 years for this range demand to be hit, and we finally hit it. And the way Ethereum versus Bitcoin came down is we just left a trail of liquidity here. Once this high breaks, this is going to be an easy squeeze up. But as I always tell you guys, distributions can go over. Distributions, D for distribution, can go over into accumulations. Actually, that happens all the time, right? But what did we have here? We had a model 2 distribution. And the target of the distribution is the range low. But look what we had on the range low. We had a 1 tap, the 2 tap, and this can be the 3 tap, hitting that range demand. So the objective of this distribution was just to tap this demand, and now we have that accumulation going on, where I just said that, yo, for an accumulation, we always look for that most fractal market structure to break, right? Which is right now around that high. It is a weekly structure, but it's kind of like daily structure ish. It's like a combination of like daily slash 3 day ish, but it's just a more important high to break. But locally, we also have a range because this itself is a range, right? And we deviated the range low. It had its own model one here that hit the target and turned into a distribution, and now we swept the low again. So I wouldn't really want to call it a Wyckoff anymore because we have 4 taps on the low. But also, if I look at it from a higher time frame, I cannot say that this is a tab one or something. So no, we just have a range deviation, and we can expect a range rotation back up if we break this local high from this local downwards pool, right? Especially because that range market structure high is also in line with the volume area. So that's why I say break me is a rotation up towards the more important market structure high, which is here. And if we break this, we can actually have that squeeze up. But what does this squeeze up mean? Or what does it mean that if we potentially found like a bottom here on Ethereum for this Bitcoin, right? Well, that means that if Bitcoin goes down, okay, probably also will also go down. They will just go down less significantly than Bitcoin, okay? And if we pump, that means that if Bitcoin pumps, alts also will probably pump, but they will probably pump harder than Bitcoin, okay? So alts have taken a massive beating while Bitcoin has just been ranging, right? And that's why that ETH versus Bitcoin has been going down drastically here. But maybe this could be a start of a bottom. But I cannot be bullish from a market structure standpoint if we just don't break any type of market structure. So this first high is really important to break, and then we can start talking about better prices. But as I say, I cannot be bearish at range lows either because we are at the range low, and this is our big range. So yeah, it's just good to keep in the back of your mind because let's say you have a lot of Bitcoin and you don't have a lot of alts or Ethereum, right? And Bitcoin hasn't really had a beating. It went down, but it's kind of still ranging, right? So maybe it's some time to deploy some Bitcoin into ETH for better returns because this squeeze up can be 80%, right? So ETH will outperform Bitcoin by 80%, which is kind of crazy. So that's it, guys. Quick recap. We're not lacking. I will recap literally every trade that I take, and I'll post it here live. If you like it, follow me. Turn on your bell notifications to not miss an analysis video because there will be one every single day, unless in the weekend when I'm not trading, right? But we're taking over the game. And thank you for like on Twitter, we have been killing it, posting the equity return. Consistency is key, the Matic trades, potential setups, and ideas from streams. But we already have 50 followers, and I made this literally a week ago from absolute scratch. Actually, getting also 100 views plus on that how to trade Wyckoff video, which in my opinion is like one of the most important videos I made, understanding Wyckoff and how to simplify it and how to find setups around it. But yeah, I appreciate every single one of you, and we're a community, so you don't just have to listen to me. You can actually reply. You can ask me questions on my Twitter underneath the YouTube videos, and I will reply to all of you, or to any question you may have. So don't be afraid to ask me anything. And let's get it, guys. See you guys tomorrow. Last trading day. Let's end the week with a banger. Peace.